Okay, let's unpack this. Imagine building a 19 million baht investment portfolio in just 5 years,
Yeah.
starting from scratch at age 20.
It sounds almost, well, unbelievable, doesn't it?
It really does, but we've actually got the real story from an investor named Ta,
Mm-hmm.
who didn't just do it, but he shared his actual portfolio, his strategies, everything.
And what's truly fascinating here, I think, isn't just the big number at the end.
Right.
It's the journey from absolute zero.
Yeah.
It's a story packed with significant gains, yes, but also some really hard lessons learned.
Definitely.
So our mission in this deep dive is really to pull out those key insights,
Okay.
surprising bits, and the actionable takeaways from his experience.
Give people a shortcut, maybe.
Exactly, a shortcut to understanding how this kind of rapid wealth building is even possible.
Even if you're starting with, like, almost nothing.
Precisely. We'll look at what worked, what didn't, and crucially, how you might apply some of these lessons yourself.
Okay, good. So starting from zero, you mentioned that. He truly began with almost nothing.
He did.
What was his actual starting point? How minimal was it?
Well, it goes back even a bit further. He technically started investing at 20, second year of uni.
Okay.
And it's critical to know no wealthy parents involved here.
Right, no safety net.
None. His initial capital was genuinely minimal, just an education fund, and a used Suzuki Swift his mom gave him.
How much was that worth?
About 300,000 band,
Yeah.
maybe? But it's even more of a from-zero story if you look before age 20.
Yeah.
Around the 2017 Bitcoin boom, he bought into Bitcoin, other cryptos.
Ah, okay. Like a lot of people back then.
Exactly. But then it crashed. Futures trading, apparently, wiped him out.
So he was actually below zero before he even started this documented journey.
Pretty much square one. Talk about trial by fire, right?
Wow. So after getting burned like that, how did he even find the motivation to start again?
Well, he was studying BBA finance.
Ah.
And that's where he said he learned these three foundational truths that really shaped everything for him.
Okay, what were they?
The first one, he called it the infinite money glitch.
Ah, that's a bold name. What did he mean? Just compounded?
Yeah, basically. But framing it that way really clicked for him.
Okay.
This idea that once you have a certain amount, money can actually start growing on its own. It works for you.
Right, the magic of compounding.
That was the second truth, yeah. Compounding. Money growing faster and faster.
Well, the third.
The third was maybe the biggest motivator for him. Super simple, but profound.
Yeah.
The more you invest, the bigger your final pot.
Obvious, maybe, but powerful if you internalize it.
Totally. It drove him to invest like almost every single penny he could find.
Even when it wasn't much.
Especially then.
Because in those early days, every penny really wasn't a lot, was it?
No, not at all. First year or two, his main income was his mom's allowance. 15,000 baht a month.
Okay.
But from that, he consistently put away 5,000 bahts every month for investing.
Wow. That's 1/3 of his income. Real discipline right there.
It truly is. And his first actual stock purchase, Com7.
Okay.
Got the idea from a finance professor who pushed students to open real accounts, feel the emotions, you know.
Not just simulations.
Exactly. And that Com7 stock,
Yeah.
it soared over 200%.
No way. His first pick.
Yep, his first multi-bagger. Big win. Huge confidence boost, obviously.
I bet. So things started snowballing then as his YouTube channel started making money.
That's when it really scaled up, yeah. He started dollar cost averaging, DCA,
Okay.
putting in 50 to 70% of his earnings.
50 to 70%. That's huge.
Aiming for at least 50,000 to 75,000 bond per month. And he still does it today.
That shows how leveraging that increased income really accelerated things.
Absolutely. Now let's break down that 19 million bond portfolio because the numbers are interesting.
Right. It's not all his own cash, is it?
Not at all. That's crucial. The total assets are 19 million THB.
Okay.
But his actual equity, his own money in the game, that's 6 million THB.
So the other 13 million.
That's liability. Borrowed money. Mostly loans for real estate.
Ah, leverage. That's the key here.
A prime example of using leverage strategically.
Okay, so looking at his own money, the 6.7 million cash-funded part, it's heavily skewed. Foreign stocks are 78%.
Yep, very dominant. Then crypto at 19%.
Still quite high.
Then tiny bits in Thai stocks, 1.7%, and gold, 0.5%.
That focus on foreign stocks is pretty aggressive, especially being based in Thailand.
It is. And then the loan-funded part, the big 13 million chunk,
That's all real estate.
100% real estate, 2 condos specifically.
Wow. Okay, so that really shows the power of borrowing to amplify things, doesn't it?
Exactly, especially when you start with limited capital.
Which brings us nicely to his strategies. He mentioned a modified core and satellite approach.
That's right. Typically core is like 70-80% stable long-term
Yeah,
stock.
index funds, that kind of thing.
And satellite is the smaller part, 20-30% for higher risk, maybe shorter-term bets.
But he did it differently.
He split it 50-50, half core, half satellite.
Why such an even split? That seems unusual.
His thinking was, well, quite pragmatic, actually. He felt he might not be skilled enough to consistently beat the market.
Okay, honest self-assessment.
But he also didn't want to be so conservative that he never even tried picking individual stocks.
So, hedging his bets, in a way?
Kind of balancing passive growth with trying for those active, potentially higher returns.
Makes sense. So, the core portfolio, the passive side, what's in there?
Focuses on low-fee index funds, international ETFs, things that grow with the market, basically. He's big on China tech ETFs like CQQQ.
Okay.
And he uses those tax-deductible funds you get in Thailand, the SSF RMF.
Right, for long-term savings, retirement.
Yeah, and those funds also invest passively internationally, like
Yeah.
SCBC Tech, which also feeds into that same CQQQ ETF.
Interesting, so doubling down on that theme.
Though he's very open that his China funds are currently down like 30%.
Oof. Shows the volatility, even passive.
Definitely.
Yeah.
He also has some private funds in there. An AI value investing fund in Vietnam, small profit there, and a thematic DIY fund, which is at a loss. Partly bad timing, he admits.
So a mix of things. Does he have a preferred order for buying these core assets?
He does. To maximize benefits, he says start with SSF funds special, tax deductible, often no fees.
Got it.
Then other SSF RMF. Then Thai-listed international index funds. And lastly, direct international ETFs.
Why the last?
Potential tax headaches when you bring the money back from direct foreign ETFs. An important practical point.
Good to know. So the core strategy summary is max tax benefits, low fees, consistent DCA.
Yep, buy high or low, doesn't matter, just keep buying.
The diversified, but with a clear long-term growth theme, sounds pretty solid.
It's a disciplined foundation. Now, the satellite portfolio, that's where he gets active.
Right, trying to beat the market.
Exactly. Selective buying of individual stocks, mostly U.S. tech growth companies.
Like the big names.
NVIDIA, AMD, Tesla, TSMC,
Yeah.
focused on themes like AI, robotics, semiconductors. Though he says themes change, you have to adapt.
And his strategy here, buy and hold.
High focus, buy and hold.
Yeah. How does DCA work in this active part? Does he buy the same stocks every month?
Not quite. He sets a monthly budget, say 25,000 VATR,
Okay.
and directs it towards the stocks in his focus list whose prices haven't run up too much yet.
Ah, so it's more like opportunistic DCA within his chosen stocks.
You could call it that. Strategic, maybe.
Has it worked?
Well, it led to a massive 600% gain on NVIDIA, a six-bagger.
Wow.
But it also led to a crippling 97% loss on another stock, CRC.
Oh my God, minus 97%. That's almost a total wipeout on that one position.
It hammers home the risk, doesn't it? The emotional roller coaster must have been intense.
Absolutely. So does that huge loss suggest maybe some diversification is still needed, even in the high-risk part? Or is it really just about betting big and hoping the winners outweigh the losers?
That's the million-dollar question, isn't it? I think
Yep.
Kelly would argue for focused diversification within an industry you really understand, not just spreading thin everywhere.
Okay. Which fits his overall philosophy, which he admits is high risk.
Very much so. High risk, high expected return. Almost no fixed income. Crypto used to balance, interestingly.
But he warns people not to just copy him, right?
Oh, strongly. He says you need 3 things to handle this kind of risk.
Which are?
1, mental fortitude. You need to stomach the swings.
Definitely. After a 97% loss.
2, youth. You have time to recover if things go wrong.
Makes sense. And 3?
Consistent, substantial cash flow. You need income independent of the portfolio.
And crucially,
The money invested must be cold money.
funds you can genuinely afford to lose.
Without wrecking your life, yeah. He aligns with this other investor, CK, who says focus is key to big wealth. Too much diversification is too safe, maybe.
So his overall approach is long-term investing, DCA, freeing up time.
Exactly. Time for self-investment, creating products, generating more income to feed back into the portfolio.
Building a whole wealth engine, not just trading stocks.
Precisely. Which brings us back to that $13 million in liabilities.
The real estate leverage, which he bought secretly from his mom.
Initially, yes. Apparently, his mother had bad experiences with rentals.
Ah, okay. So what pitfalls did 10 likely study to avoid? It can't just be about location, surely.
No, you're right. He studied it hard, took courses he mentioned. He'd
Yeah.
be focused on avoiding things like bad tenants.
Yeah, nightmares there.
Right.
Misrent, property damage.
Exactly. Or underestimating costs, maintenance, taxes, times when it's empty,
Vacancy periods, yeah.
and buying in a market where you can't sell easily if you need to, illiquidity.
So how did he mitigate that?
By choosing excellent locations. High demand, attract good tenants to cover the loan interest, and strong future growth potential.
Where did he buy?
First one in Rama 9, apparently it appreciated quickly. Then a second in Thong Lor Ekamai, prime spots.
Okay. And this is where the leverage really kicks in.
Totally. Allows someone with limited cash to build a multi-million portfolio using credit.
Using the bank's money, essentially.
Right. His condos generate rental yields 4% and 6%. Not super high, but decent.
And for the first one, since he used almost no cash.
His ROI is technically infinite, as he puts it.
Crazy. But high leverage means high risk too, right?
Absolutely. If the market turns or you can't find tenants, it can go bad fast. So that strategic property selection is everything.
Okay. So after 5 years of this roller coaster, he boiled it down to 11 key lessons.
Yep, wisdom gained through experience, not just theory.
What's number one?
Consistency over genius. This is huge.
Okay.
He says portfolio growth mostly comes from saving and investing a lot consistently and getting market or maybe slightly above market returns.
Not from being some kind of investing wizard.
Less about being a genius stock picker, more about just, consistently putting the money in,
Yeah.
showing up.
That's powerful and almost counterintuitive. What's number two?
Start early for experience.
Mhm.
Even small amounts teach you invaluable lessons.
Emotional control.
Exactly. Handling the ups and downs.
Yeah.
So you make smarter choices later when the stakes are higher. And always use cold money.
Right. Money you can afford to lose. Build resilience.
Third is a big one. Prioritize income generation.
More important than trying to beat the market.
He thinks so, especially before you have a really massive portfolio, like
Really?
100 billion baht maybe.
Okay.
Focus on finding extra income streams first. Don't waste time chasing secret formulas or trying to time the market perfectly.
So be an entrepreneur first, investor second, almost.
In the early stages, yeah. Build the income engine. Number 4, DCA for discipline and diversification.
We talked about DCA, builds discipline, regular investment.
Yep. Works best for assets trending up long term. And diversify across assets, U.S., China, Vietnam, whatever, and within industries, mitigates risk.
Standard advice, but clearly effective for him. Number 5 is potentially controversial.
Yeah. Save by living at home.
He says it's not shameful.
Nope. It massively cuts expenses, frees up way more cash for investing. He only moved out at 25.
Wow. Shows how a temporary lifestyle choice can really fast-track things.
Definitely. 6, leverage credit for real estate.
If you have low capital but good income.
Use credit to buy investment properties. It expands your portfolio dramatically. But you need the knowledge to manage the risk.
Can't stress that enough. 7 builds on that.
Yep. Prioritize investment credit.
Meaning?
Avoid big personal debts early on, like fancy car loans or even maybe a mortgage for your own house.
Why?
It can limit your borrowing power for those crucial investment properties later. Optimize your credit for investing first.
Smart financial planning. Number 8 is interesting.
The loan approval hierarchy. His experience, anyway.
Who gets approved most easily for property loans?
Salaried employees, generally top.
Mm-hmm.
Then freelancers. Then business owners.
Huh. Fascinating insight into how banks view risk, maybe.
Could be. Number 9 is unexpected.
Yeah.
Donate regularly.
Donate. How does
Yeah.
that help investing?
He finds frequent donations, even small ones, help reduce his attachment to wealth.
Psychologically.
Calms the mind, especially during market downturns. Reminds him money and gold are external things.
Links emotional well-being and financial discipline. You don't often hear that. It's insightful. 10 was basically follow his channel.
Okay, self-promotion. Fair enough.
And number 11, he calls this the most crucial lesson.
Okay, lay it on us.
Utilize all advantages. Use everything you've got.
Like what?
Capital, connections, reputation, talent, any strength you have. Use it to get ahead. No shame in having a head start.
Absolutely not. There's no rule saying you must start from zero. Leverage whatever advantages you possess.
That's a really powerful point. Use what you have. Don't compare. Just execute.
Exactly.
And speaking of executing, especially that core portfolio approach, for listeners who are thinking, okay, how do I actually do that?
Mm.
He did outline some clear steps, and actually one of our partners, InnovestX, is set up to help with exactly this,
Oh, right.
core portfolio allocation. And they've got this temporary zero front-end fee offer running until June 28th, 2024.
Handy. So what are Tan's steps for setting up that core?
4 steps. First, define your investment goal.
Okay, what are you saving for?
Yeah. Long term, 5+ years. Retirement, kids' education, house deposit. If yes, core strategy is suitable.
Makes sense. Step 2,
Assess your risk tolerance. You got to know yourself.
take one of those questionnaires probably.
Exactly. Find out if you're low, medium, high risk. Let's say you land on medium high risk tolerance.
Okay.
That guides step 3. Choose suitable assets and allocation.
Right. Based on that medium high risk profile, what kind of mix?
Example he gave, maybe 40% stocks, 55% bonds, 5% alternatives.
Okay, a balanced but growth-oriented mix.
Then you look at what you already own and fill in the gaps. He mentioned some specific fund types, mainly available in Thailand, but the types are relevant anywhere.
All right, like index funds, bond funds.
Exactly. For global stocks, something like SCB World Passive follows MSCI World Index, globally diversified, low-cost tracker, basically.
Standard core holding.
And bonds. He mentioned Principal GFix for global bonds, KKP Act Fix for Thai bonds. Again, specific examples, but think global and local bond diversification.
Got it. And alternatives.
Things like SCB Gold H for gold, SCB G Pro PA for global real estate funds, even a very low-risk option like ASPD Plus, short-term bonds.
So building blocks for diversification.
Yeah. And the benefit of using these kinds of feeder funds in Thailand, he noted, is global diversification without direct foreign stock tax issues for locals. Plus that InnovestX fee offer currently.
Okay, clear benefits there. Final step.
Step 4, review and rebalance regularly. Crucial, but often forgotten.
How often?
Maybe every 6-12 months. Check if your allocations have drifted.
Like if stocks have shot up and now make up too much of the portfolio.
Exactly. You sell some of the overweight asset, buy more of the underweight one. Get back to your target mix.
Keeps your risk level consistent.
Yeah.
Also important if your goals or market views change, right?
Absolutely. It's not set and forget forever.
This whole approach, it really underlines that building wealth isn't just one thing, is it?
No.
It's this blend of strategic planning, disciplined execution, being willing to use leverage smartly, and just continuously learning.
So wrapping this up, what does this all mean for you listening? Well, the path to financial independence might not be about some secret trading formula.
Yep.
It seems to be more about consistency, strategic leverage, and maybe the most powerful lever. Constantly finding ways to boost your earning potential.
Which really raises an important question, doesn't it? In a world where technology is always creating new tools, new possibilities,
Yeah.
should we rethink the old advice of just save more? Maybe the focus should shift more towards earning more as the real catalyst for exponential growth.
That's provocative.
So the question for you is, what's your unfair advantage? What unique skill or resource do you possess right now that you could leverage to unlock that potential and really accelerate your own financial